Awesome. All right, guys, what we'll do is we'll give everybody a couple of minutes to get in, because it's always good to give a couple of minutes to allow a few people to get into Periscope. So we'll give everybody a couple of minutes. We're going to drink our drinks, but we'll come back to you very shortly.
This, by the way, doesn't look like the standard 11FS office. I just thought I'd point that out.
I mean, yeah, we'll tell everybody where we are today, because, me, you, and Zoe and Tom Evans have been having a bit of a day trip, haven't we, which is good fun.
We have.
But we're having good fun. So it's standard value number one of 11FS, have entertainment while we're doing it, right?
And I think this is it. Like, this is the kind of core podcast territory. Having a couple of beers after some, big
amazing business
stuff.
Yeah. I mean, it could go one or two ways, quite frankly.
It could be career-ending, frankly.
So if this is the demise of, Jason Bates and David Breer's career right now, which we were discussing before we came on air, that it might be, we will see where we go.
I think either way, there's going to be some beer-fueled truth bombs delivered.
Yeah. Those sort of end-of-the-night rants that might go either way type vibe.
So if Naz, our lead counsel and chief risk officer, is watching, probably want to turn off about now.
Yeah. Tune back in if there are complaints, shall we say. So. But anyway, talk amongst yourselves, and we're going to drink our drinks, and then we'll sort of come back to you very shortly.
I'm only going to sip mine, because I think any more, and
you're over that limit.
What is it, that kind of 2-pint, you really get into the groove, and then sort of beyond that, it's sort of, you think you're doing really well, so you start slurring, and it all goes badly?
I mean, it's... having worked doing the podcast for the last 3 years, we've figured out that the peak of humanity. I know. Peak of humanity is 1.6 pints. Anything beyond that is too much.
And where are you?
I mean, this is the 4th. So I now know I can't drive. But can I do this? We will see. All this and more.
On this episode of On Air.
It's been so well. I'm not sure we're really feeding into our, behaviours that we want to kind of...
We don't condone this, kids.
Exactly.
This is a bad idea.
It is. How are we doing, Zoe?
17.
All right.
17 people watching us after
commit
having a couple of
suicide
pints in a bar in Cardiff.
Are we going to say, yeah. So this week, FinTech Insider On Air is coming to you live from Cardiff. Beautiful, beautiful sunny Cardiff. It's currently 25 degrees outside. Me, Jason, Zoe, and Tom Evans. Tom Evans, who actually lives in Cardiff, has spent a day actually talking to some super, super interesting people. So, I mean, after that, we're now doing this. And this is episode 29 now of FinTech Insider On Air. We're going to be talking today about what is truly digital. Because truly digital is something that actually at 11FS we talk about a lot in terms of where we are in the cycle. But fundamentally, what is it that actually organizations have to do to really sort of push to break beyond what it is that they're currently doing in that digitized space? But it's not an easy thing. So I guess with that, really, we have sort of, in the way that you have cycles of man, the evolution of man, we have that sort of spectrum. Do you want to sort of unpack that a little bit?
Yeah, well, look, 11FS has been going for 3 years. Before that, we were doing other things in big banks, small banks, starting at banks. And I think we're seeing a consistent pattern. And it's this move from analog, traditional products, way back to the passbook in a bank, through to digitizing that. You take the passbook, it becomes a statement, you put the statement on a phone, you put the statement on a screen, on an iPad, on a desktop. And there are payments, and there are statements, and there are balances. And those fundamental products are still the same as they were 20, 30, 40 years ago, but now we've digitized them. So there's this transition that we're seeing from analog to digitized. And when big execs stand up and they talk about what they're doing, most of the time it's digitizing, it's just moving along that path. But then we're looking at this sort of third column, truly digital. And what does that mean? Well, analog, digitized is the same thing, but just the analog product on a technology. Where digital is about finding the new voice for that technology. So some good examples, and ones we often use with clients, are the newspaper. So we went from an analog newspaper, we digitized it. I don't know if you remember when you first saw a newspaper on an iPad and it had a page curl. Most amazing moment. You're like, wow, look.
I was very excited by that. I have to say, that little thing, yeah.
But then Facebook News, BuzzFeed, suddenly we've got news outlets, news distribution with an infinite number of column inches that can produce thousands of stories a day, ad revenue craters, and that whole business operating model changes. The column 2 digitized news is very different from the column 3 business. Music, same thing. Suddenly we've gone from LPs to cassettes to CDs, and you see the revenue graph sort of going up. We sell albums on iTunes, and it's still the same model. Distribution's lower, but it's great. Spotify is not bad at all.
Yeah.
And when we look at those column 3 businesses, we have this acronym we talk to clients about, digital riches, real-time, intelligent, contextual, human, extendable services. When you look at those column 3 businesses, they are this very different type of business versus the column 2. And what we see is you don't build through. It's not you start with an analog product, digitize it, and then we can keep going to that digital thing. There's this chasm in the middle.
Yeah. And where does that kind of come from? Because I guess the mindset of taking something analog and digitizing it, like that, it's linear. You can see that. I can see this functionality in a branch or this functionality in a analog current account, car insurance, whatever product, but then sort of creating that functionality. Because I mean, the problem is, does it come back to like why people are investing in digitization in the first place? Because I mean, most of the models that I've seen are investing in digitization because of, they're taking people and paper out of the process. They're not necessarily rethinking what it is, the configuration of these things.
Yeah, it's digital as a channel, and a way of reducing costs. So it's that whole, I wrote a piece ages ago on the death of omnichannel, because if you believe that digital is just another channel that fits with branches, phone lines, the post, and now we've got this, additional thing, then you're using it at that level as a communications mechanism.
Yeah.
We're delivering documents or taking your instructions. But the fact that we've got, virtual supercomputers in our pocket and data centers that mean that it's not just what's my balance and let me transfer money, but the fact that we can take data, can create insights, can be proactive and look at what you're trying to achieve, that means that digital, or the digitized banking is just what's come before, but in the same level. Digital becomes something more. And we talk about, that private banking for the mass market almost as a North Star, because the real-time, intelligent, contextual services allow us to deliver that.
And is that, the H in digital riches is very important, right? The sort of human element of actually what digital can be. The promise of digital, we're both old enough to remember, but the promise of digital was actually personalization.
Jetpacks. That's the promise of digital, my friend.
That stuff for sure. But the promise was, it was one-to-one marketing. It was personalization. It was customization to what I wanted it to be. But actually, I think the reality of what we've now seen in digital banking or digitized banking is actually a commoditized, a further commoditized product with 30 to 40% of the features and functionality of truly analog capability missing, which is, in a world where you've got analog products with humans filling the gap, and now you've got digitized products without humans filling the gap, then actually, arguably, we're in a worse place now than we were 10 years ago.
But you see that in other industries. The digitized newspaper, well, that's great. But the thing runs out of battery.
Yeah.
I can't pull a big broadsheet out. I can't read it in the bath. I can't,
share it with
do
a friend.
all of that stuff. So in some ways, that first iteration is in fact, I think this is a Marshall McLuhan quote. The guy who did The Media is the Message. He also had this thing where he spoke about that any new media starts as a degradation of the previous media that came before.
Yeah.
So if anything, digitized banking is colder and more device dependent and more horrible than a straight-on a call to First Direct or a conversation to branch. And then the question is, well, how does it find the virtues of digital to create something better?
Yeah.
And then it starts to get into its own when it doesn't take the virtues of the thing that came before.
Yeah.
But the problem is that that people are, there's almost like a fool's gold of moving from analog to digitized. Let's banking execs and boards say, digital, we've done it.
Yeah.
My bank has an app, we're fine, like we're sorted. Versus the looking at this, looking back to the start to say what really are customer problems and what are the capabilities and financial products we have that we can bring together to solve those problems.
I guess, me and you have argued a lot that we sort of haven't really seen digital banking yet.
No.
Like, because arguably, and we haven't really talked about this before, but like 4 pints in, this is where I'm kind of going.
Bring it on.
I know, right? So this is going to be new, guys, to me as much as everybody else. But like the cycle for like analog, so like commodity analog products, really goes through a cycle of like innovation and boom to commoditizing down the print press and everything that goes with it. We never talked about this before. No. Let's see where we go with this. Okay, let's wait. But like from a digitized perspective, we've seen the digitization of banking. We've seen mobile APIs being exposed from legacy core systems. And actually what we're at is like the commoditization of the digitized platform, which means actually people are looking at digitized platforms but low-cost digitized platforms, which arguably inhibits them moving really to that truly digital capability. And where's that leap going to come from? Because arguably, the leap from analog to digitized was paper to digital. But to a digital medium distribution. But arguably, we're talking about digital distribution to digital distribution, which is almost like the issue is going to be the business case that organizations can make to make the next leap happen. But the inhibitor between digitized and digital is so much more fundamental than just cost savings in terms of where you're going. So in order for big organizations who are currently in that digitized model to justify the investment that they need to move into that digital landscape, because we talk a lot about, if anybody hasn't seen the banking battlefield diagram that we've kind of put out a lot, like the line where you get in between traditional core banking capability and new age core banking systems, is kind of actually where that nuance kind of lies, right?
It's interesting because when you look Monzo, Starling, Revolut, N26, where Barclays is heading, DNB, Standard Chartered, there's almost a heading towards a basic level of what does digitized banking represent with the current systems we've got, with MasterCard and Visa, with payments, with 18 character identifiers for faster payments to the UK. What is the basics? And it's a real-time balance, real-time notifications, some enhanced metadata, and that's almost using existing infrastructure to the point.
Well, that's the thing. It's. You can use a system to redline to create the basics, but actually, if your basics is actually here and not here, then actually the things that you need to put in place.
Well, I think that's when it gets to this, private banking for the mass market. Once you've got that in place, then how are you then building microservices that connect to this fire hose of data that then make customers' lives better, that bring insights to bear, that actually help sort of shape their behavior in ways that allow them to be in control, to make the trade-offs, to be able to manage their spending money, manage how much they live on day to day, save for the future, pay off debts. It almost becomes the entry point into a financial system. Rather than an account. So it's because we were talking to someone earlier today about the difference between is the current account really the thing? Well, it depends how you conceptualize it. If you think of current account as it is today, no. But if you think about that, well, it's not even control panel. It's the center, the personal banker. So to how you manage your day-to-day life. I've got a wife, I've got a son, we've got a property, we've got a car, we've got a whole host of other things. And so money comes into an account, we have to separate it out. I get some spending money, my wife gets some spending money, my son gets some spending money, we're saving for some things, we're paying off on the debts. That whole system, we have to put together ourselves. And I feel like that evolution from basic account to digitized banking to actually providing me with a way of sleeping well at night, saving the things that I need to save. And when I come and say, I'm going to buy a new laptop, can I afford it or not, and how does that work? Suddenly we're into broader trade-offs that actually should be brought together to make that happen.
Yeah, I guess, current account is sort of an old term for.
Yeah.
I mean, it's just the center of that universe, essentially, isn't it? Like every product from a distribution perspective, because ultimately what you're talking about is disbursements, right?
Yeah.
So a payment comes in, and then it's where is this being dispersed to do what with?
Yeah.
But I guess it's back in the good old days, like going back to our kind of like analog kind of side of things, where actually the person who would have understood those disbursements, either from a retail perspective or a commercial perspective, or up into a private banking kind of perspective,
Sure.
like actually that relationship was, the people on the other side of the desk, right? It was like the lovely guy with the lovely kind of bowler hat and the lovely suit type thing, understanding what it was that you needed as an individual. But actually, is that where we're sort of, to your point around how do you take private banking to the mass market? Like, arguably, the private banking experience is what is needed today, because more than ever, people have, more options, more optionality in terms of vendors that they can pick from, or ways in which they can save, or ways in which they can invest. Or
Exactly.
So, I mean, advice is a dirty word when it comes from a regulator's perspective, but advice and guidance ultimately now is more important than ever, right?
Well, you go back to that mythical ideal of a 1950s bank manager in a small village,
like Mary Poppins.
Mary
type,
Poppins,
yeah.
Kind of pre that. Like,
Okay.
You've got your small village, and Edward, your bank manager, you go and visit him and he's like, Bob, it's time to sort out something for your kids, and I notice you don't have a pension. But there was something about the intent there, about actually if I'm acting on your behalf, it's not about selling you a product or connecting you to something particular. It's about that financial system that I know you should be working. I mean, we have now red, amber, green lights on food cartons in the UK. Like, how much salt does it have? How much carbohydrate? But in terms of like how should someone manage their financial system, what do we have from banks? We don't have anything. And I know that there's a reticence, and for good reasons, around getting into that from a regulatory perspective. But still, like, people should have an emergency fund. People should pay down, the big debts. They shouldn't really get into big debts. They should be putting some money aside for their pension, which they don't. They should be saving, which they don't. They shouldn't, they need to manage the day-to-day living money and the lifestyle inflation against the spending money that I have and the money I'm putting aside. And that's the direction that really, on the banking side, never mind insurance and investments and savings or whatever, that we need to, I think we need to head towards.
And does that speak to, I mean, in an old model of like universal banking, where like your relationship with one bank has a current account, a credit card, a savings account, investments, mortgages, pension, like the ecosystem there for financial services was kind of under one roof, essentially. Like, is there still a place for that type of like holistic financial services, or is that a gap? We've seen that unbundling. Like, are we going to start seeing open banking and API driven integration actually being a rebundling of what those services could actually be? Because like for me, we see. I mean, if you look at my home screen on my mobile device type thing, it's like 40 different fintech players who are doing little slivers of that. Yeah. But the like intelligence is of which one to do where is kind of mine right now.
Yeah.
And like, I mean, working in insurance, working in banking for a bunch of time, not everybody does that. So like the decisions that I make are not going to be what everybody else makes.
But it's interesting as to how those things come back together, because we've spoken before around like what's the correct constellations, aggregations of services, because they have to kind of belong into a particular context.
I like constellation though. Like we had this conversation. We had this conversation with somebody earlier on, and I didn't get to say it in the meeting. But actually, constellation I like, but because it all orientates around something.
Yes.
And it's interesting to understand. I mean, in the old-fashioned context, oscillates around, rotates around a current account, right?
Yes.
Because current accounts is essentially the kind of loss leader from a banking perspective in universal banking to upsell and cross-sell into other things. But I mean, are we at the point where open banking will actually offer the current account not being that oscillation?
Well, I think the constellation was financial products, and a bank delivers them. Therefore, you sign up to the bank and away you go. But I really like the sort of model of social media, because when you look at how many successful social media companies are there? We've got a party going on behind us. Woohoo! How many social media companies are there, and what are their contexts?
Sure.
So sure, you've got like Snapchat or TikTok or stuff that's like one-to-one.
Yeah.
It's going to be a one-to-one thing, or Facebook for sort of curated groups, or Twitter for broadcasting to everyone, or LinkedIn for my work life. And it's like they've found particular context that then services belong around. So my hypothesis that I've got a question of. Do the new sort of aggregation points for these intelligent services we're talking about, do they actually belong around, are they more contextual? So is there an everyday banking piece? Because there's somewhere your salary goes in, money gets dispersed, I'm on the way to the bus stop, I'm going out for a night out, I'm doing something.
Yeah.
Like there's my day-to-day living money. And there's a whole set of services that include peer-to-peer payments, or sending money, the pots of separating money out for things that I want to do immediately. There's probably shared stuff for my wife and my child and all this kind of stuff. But there's not, within that space, mortgages, pensions, ISAs, the longer term things. And maybe even the investment stuff is beyond the commitments. So I'm interested as to what sort of constellation, what context there are that then in that particular context I want to be able to see this particular data and this particular stuff. And what's interesting there is it might be that I buy something day to day, I go out and buy a laptop or a drone or something, and that I want insurance on that, or I want lending against that. And that's a different lending product to mortgage, my longer term things. So I'm interested to see whether, I think one interface is too small to deliver all of that to everyone. And I don't want to see all of that in different contexts. And in fact, I may want to see an iPad or my laptop when I'm doing my Saturday morning, drinking my coffee, having a think about the big picture. Yeah. Whereas day to day on a night out, I want to see it on my phone.
Sure. I mean that's like continuing your constellation point. Yeah. It's like actually at the point where you realise your banking universe is surrounded by an insurance universe, which is surrounded by maybe a health insurance universe. Like actually, all of these things kind of oscillating around one another, because the context for, bank assurance has been a thing for a long time, but really it's been treated like a commodity product distributed through slightly better information.
Definitely.
Whereas actually, we've seen that sort of, to my point around the 40 apps that I've got on my mobile phone right now, we've seen that kind of unbundling of financial services to a point where slice by slice, different people's beachheads to do things most effectively, which has kind of led to people kind of really looking at what is it that we've done well, we've created a community, we can do more things kind of around it. Yeah. But arguably we're going to start seeing people doing, Monzo and Starling and, various different people in this place we've actually seen coming out very strongly for marketplaces.
Yeah.
Because actually, to my point earlier on, is arguably every constellation oscillates, rotates, the gravitational field is around something. And in this field, particularly in financial services, it's probably day-to-day engagement, it's relationship building, it's actually, can you be the closest to the problem that the consumer actually has? Yeah. And actually, can you actually have this is where many PFN brands, I think, have really, really failed, is they've tried to create a sort of a type of intimacy with consumers that actually they haven't earned enough to have the types of conversations that they need to suggest some sort of material change to the direction in which they're going. So, is this the model that marketplace banking is kind of moving into, which is, that center point. It is the most trusted autopilot for all of your financial life. And I guess, secondary question to that is like, what does...
Secondary question?
I know.
If that wasn't big enough.
I know. Well, I need to take a drink, so the secondary question... Like, is that where those guys are going? But ultimately, with that, then does that put the secondary players into a different perspective? Because, fundamentally, I go back to, universal principles of, universal banking is, create a relationship with customer, cross-sell, upsell, and actually, you create... insurance. It's travel. Travel insurance is a loss leader. Current accounts in banking is a kind of a loss leader for kind of getting into upsell, cross sell. But if your primary engagement is not that primary relationship, then does that mean that actually a lot of those other products will start to be more costly for customers?
There's a crazy amount to unpack there.
I know. I'm going to drink this half a pint. Good luck.
Is this where you say, "Oh, I'm just going to the toilet"? I'll
exactly.
leave you for a few
I'm going to go get another pint.
Look, we talk a lot to clients about trying to draw out some of these things into layers. At the bottom, you've got your lean, mean product engine. If you haven't got that, it just doesn't work anyway. With a massive back office and spending a few $100 million a year on infrastructure with mainframes galore, it's difficult to do anything. So, look, we need this lean, mean product engine, insurance, banking, or whatever.
And by that, though, I think it's good to unpack that because ultimately, most big financial services organizations are almost like a victim of their own success to a certain degree, right? Okay. We're in a situation where...
I haven't even started on your first question. You're asking number 3.
I know, I'm jumping right in, but 4 pints in, this is what I do, right? So imagine what I'd like one more of these and we're done. So, but being in a situation where essentially I mean this in the nicest possible way, is most big financial services organizations are a victim of their own success. It's doing so well has led to them buying more stuff, which has led to them not integrating it properly, which has led to
it's classic
monolithic
dilemma stuff.
Yeah,
it's like you're a vital utility to millions of people doing a very specific thing, incentivized with an operating model around a particular product. And the thing we're talking about is basically from the customer back. We see all of this day to day as consumers. And it's fascinating when you're in a workshop or you're working with bankers and you suddenly see them flip to put their consumer hat on. Then suddenly it's yes, it is a bit odd that I have a savings account over here and my investments here and 3 current accounts that I kind of interlink and a Monzo card that I load to have my allowance on. I guess when you think about it, yes, it is a bit odd. But then they put their I'm ahead of credit cards on again, and it's like, yes, but let's talk about how we get people using more credit cards. Yes. So it's that, we're in an intermediate stage. I find the marketplace view, where actually we're going to connect you with lots of individual products and services. It's suboptimal. It's that sort of where we are now, we're going to solve the problem of your 40 apps by helping you curate those things. Yeah. But ultimately, no one wants 40 apps. They want the services delivered to make their financial life easier and to be able to connect those things together. Now, at that bottom layer, that sort of financial product layer, does that mean that someone who could provide your day-to-day financial experience could connect you with a whole host of insurance providers, some best of breed, some selected, depending on who you are and who you think you'll get the best? Sure. Do I want to go through 50 providers to try and select who I want? I don't.
Yeah.
But I think then the layer on top is the one that interests me, the intelligent services bit. We talk to customers about okay, you access a financial product, you get a current account, it has a balance, it has a statement, it has a card, it has all this stuff. But then the stuff you do on top of that, whether you're a small business or an individual or a 15-year-old trying to manage your pocket money, there's a whole set of things that you have to do that technology allows us to deliver. Yeah. And then beyond that, I think we're into the end-to-end journeys. So, to your point, what belongs within the banking bit and what belongs within other journeys, actually lending should belong with where I need to borrow the money for. Some of those things might be I've got a cash flow hole, I've had an unexpected thing, so it might be in my banking app. But lots of other things become payment by installments or subscription living. And so the insurance, payments, lending bits and what other journeys they belong in becomes interesting. So I tend to think of it in that sort of that layered perspective. If you're not doing that that lean mean product engine, then you're using Clearbank, or you're using a Solaris, or you're using someone who specialises in that.
Yeah.
They got ultimately 5 people in front of a laptop or in front of the big machine running a super lean product thing. Above that, you're a specialist in understanding the brutal realities of customers' lives and creating services that deliver against those. And then even kind of beyond that, you're integrating into the bigger journeys. So a bit like Uber, at one point, you used to have to say, oh, where am I? Does anyone have a taxi number? Okay, I'll give you, do you have a taxi free? Does anyone got money? Oh, yeah, do you take cards? And it was horrific.
Yeah.
But through APIs, connecting all these things together, away you go. Now, buying a car, buying a house, trying to work out how this trade-offs work becomes an interesting area.
Yeah, but I think to your point earlier on around actually private banking for the mass market, actually it's not just taking where we were and commoditizing it down to a lower cost thing. It's actually taking where wealthy people were and generating it down to like the retail space.
Yeah.
So, arguably what we're seeing is like the people aren't looking for better banking. They're looking for like just a different category in terms of what they're doing, because whether it's actually banking products, or whether it's insurance products, or whether it's what I'm spending on from a utility or anything perspective, actually it's kind of like people are looking for autopilot.
Well, my personal view on Monzo's success is that it won by creating a new category of product. That actually it was about the spending account.
Yeah.
It was like, until that point, people had managed their sort of glide path to the end of the month, taking money out of the ATM, putting it in their wallet, spending it, or trying to keep an eye on their account and saying, oh, I've got a few £1,000s in the account. Can I afford to go out tonight? I think so. I don't think I've got any big bills. And now we've moved to why has it got a few million customers? Because people have basically their main account that bills comes out, and then they have another account which is their spending money.
Yeah.
And the fact that it does great FX rates, peer-to-peer, bill splitting, gives you an up-to-date balance, is a perfect sort of behavioural financial product/service around that, which in some ways is a curse and a blessing. It means that you're not fighting against people for opening a current account, but on the other hand, you've found an unmet need, which is leading to millions of people signing up to connect against these things.
Well, and I mean, they're the more active things, right?
Yeah.
Like utility, direct debit, standing orders are passive.
Yes.
This stuff in the mid, arguably it's what I want to do. We always talk about jobs to be done, right? Arguably the jobs and what traditional financial services are kind of providing, it's like kind of Monzo and the Starlings and the Revoluts and the N26s have kind of filled this center column of active financial services.
Yes.
The passive stuff is probably still happening within that traditional world. It's just, we talk a lot about, we're in this weird world where the big if you're a Lloyds Banking Group or you're a Barclays, you haven't seen a significant drop in your current account base, but actually the amount of those current accounts that are now zombie accounts, where you have all of the operating cost, you have the people who have got those standing orders, those direct debits that are still happening here, but their active financial services
their discretionary spending.
Yeah, it's happening somewhere else.
Here.
Yeah,
because that mental accounting, that sort of separating out, it fits better with an individual rather than having to make them mental account of, I see my balance, now how much am I allowed to spend, and where is that going for savings, and how does all that work?
Yeah.
Some people manage that super well, others super badly, but the construct of a spending card just didn't exist previously.
Well, is that not though a very, if there is no bigger alarm bell going off for people in that column one, where you have all of the operating cost, you have all of the running costs, but none of the benefits? Because I go back to universal banking. If you are not seeing your customer, cross-sell, upsell is not going to work, right?
Sure.
So your pricing and your dynamics of basic banking
Sure.
needs to be fundamentally different, because you're never going to see that secondary or tertiary revenue, because I mean, you're not seeing your customers. So like, has this? I mean,
But
is
on
this
on the other hand, you might say, well, actually, a challenger bank encouraging people to do energy switching is actually incongruous with the way that people might use that account.
Yeah.
So it might actually be energy switching might work better for a big bank, because actually people tend to use the big bank for their utility bills.
Yeah.
But it ends up like back to that context stuff.
Yeah.
That actually, if suddenly an account is more about my day-to-day living, and this other account is actually more about my day-to-day spending, my monthly living and my day-to-day spending, then suddenly the features and opportunities and ways of monetizing those things become really different.
Yeah.
And actually, what shouldn't happen is, you shouldn't get the big banks then trying to be the challenger banks, and the challenger banks trying to be the big banks, because then that collapses this game to one account. And actually what we're seeing in value is this separation of context. So it's almost, on one hand we're looking for context around, day-to-day, longer term, stuff. But on the other hand, even in the day-to-day stuff, there's the discretionary spending, the bills, the debt I'm paying, the money I'm putting aside. So I keep going back to the behavioural things that we talk to clients about. Like, there's the behavioural actions and processes, but also the mental accounting with which people separate out their money and actually have it being in different mental compartments.
Yeah. I think that's really interesting, and it's if I'm honest with you, I don't think it's something that's talked about at all.
No.
It's the difference between frivolity and utility. And actually, I might have just made a T-shirt there at that point, but being in a situation where, utility, but is there? I mean, anywhere where utility requires, if you look at any industry, if you look at mobile network operators, if you look at gas, if you look at anywhere, and arguably this is the game that traditional banks are kind of in right now, is utility, whether they chose to kind of move into that space or whether they've been moved into that space by fintech providing more of a frivolity kind of spend. Like, utility requires super low cost. It requires super low unit economics in terms of actually what they're doing. So, I mean, whether they know it or not, banks are into the utility play.
Yeah.
But the amount of innovation labs, the amount of innovation, the capex spends that we're seeing on innovative plays on blah 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 blah. They're not playing an OPEX model; they're playing a capex model right now. So arguably, banks should be playing more of a defensive, low cost, low infrastructure utility play. Because
even if they're doing the intelligent services end-to-end journey stuff, it has to be based on a super low cost product engine.
Yeah.
Ultimately, that you can't be you might argue big banks are worst of all worlds.
Yeah.
Super bloated, massive back ends with tens of thousands of back office staff, aging infrastructure. No one would select them as a thing. And then, how are we with intelligent services? Well, we're omni-channel, so we let people access their account anywhere. Great, nowhere. And how are we with end-to-end journeys? Well, we don't really partner with anyone. It's they come to us. It's right. So you're kind of in the middle ground and lower league table for all of those three levels. Whereas there are specialist players in each of the levels, and some players that are delivering across levels.
Yeah.
So it changes the
dynamic,
the marketplace.
Yeah. I mean, so universal banking was a thing.
It was. It is.
I mean, it's a defensive play for many of the big incumbent organizations, right? But they fail to maybe have the relationship that they think they had with general consumer, and increasingly, I guess, it's been that thing where challenger banks will never catch on. I mean, they'll never scale beyond a prepaid thing. They'll never scale beyond the M25. They'll never scale beyond 2 million people.
They won't get salary paid in.
Yeah, I mean, they'll never get a proper banking license. All of these things. So actually, arguably, what we're seeing is now the sort of I mean, I don't want to sort of go too sci-fi, but like it's like
You've had 4 pints. Like you can do whatever you want.
I'm going to do this. So, but at that point, it's like it is Judgment Day stuff.
Oh, wow.
Because ultimately,
that was sci-fi.
I know. Because ultimately, like from my perspective, it's not really about what the fintechs choose to do. Because ultimately, I still think fintechs are incredibly well-funded, small players in this space. Monzo is great, but it's got 2-point-something million customers. And actually, if you're a HSBC or you're a RBS or you're a Barclays or somebody, then actually it's kind of a blemish on this year, but not like the problem that kind of... So like, actually, is it enough of a problem that the big organizations kind of really, truly wake up to needing to do something different? And if they do have to wake up something different, what is that?
Wow. I go back to that. I think there was a presentation before a keynote that I gave at some point that was talking about Netflix's revenue, Blockbuster's revenue. It was like 5 billion, 5 billion, 5 billion something.
No billion.
Nothing.
Yeah.
Like bankrupt. And I think that's the ultimate worst case scenario.
Yeah.
That there's some tipping point that suddenly away we go. I think that the challenger banks, whether it's N26 or Revolut or Starling or whoever, are providing parity products at the moment that have the capability to deliver a lot more because of the inherent infrastructure and approach.
So I think on that though is like actually with what we see with Monzo and Starling and Revolut, it's not that arguably Revolut is not a revolution, right? Name for this episode. But like what we're sort of seeing in those things is not such a revolution that we're going from going to a store to pick up a video to digital streaming in terms of what we're seeing.
Sure.
So I like that cliff. And this, arguably, this is the opportunity of the banks because they can kind of see that the writing is on the... Like, the worst case right now for big banks is actually somebody doing what they do for 10% of the operating cost, right?
Sure.
That's scary enough, isn't it?
10 times better service for 10 times lower cost.
Yeah.
And ultimately, challenger banks being able to implement new services with a low capex that has no impact on their OpEx. Whereas a big bank will have to spend a big amount of capex. Yeah. And by the way, next year IT costs have gone up.
Yeah.
So there's this sort of asymptote where suddenly you're increasing, you're keeping up with the market, you're doing really well, and then all of a sudden it just becomes unsustainable. Yeah. And I think that's what creates that collapse in, that sort of new market stuff.
But the sustainability is relative, isn't it? Like unsustainability is relative as well.
Well, sure. I mean, big banks are going to point at, at challenger banks and say, well, look, they're not making money. None of them are making money. Yeah. It's a land grab for new digital approaches that they and their investors believe that they are well set to deliver a much lower operating cost with a much higher service, and therefore being disruptive. But I guess, Zoe, do we have any questions as David and I have been drinking and rambling for now about 50 minutes?
A couple of positive comments, but no questions.
Oh, right. Tell us the positive comments.
Like, fascinating information, great guys, and I need a drink now.
Okay. Yeah. I mean, that'll be...
So that's a fascinating comment. I assume so. To be honest, after a couple of pints, everything seems fascinating.
It does.
And I think the other one was I need a drink now, which I think you do.
I think we probably do. And
I'm having a tropical IPA at the moment.
I mean, on that note, we probably need to head. Like we've got as Jason said earlier on, we're in Cardiff right now, and we really need to head back to London. So I know we've got a train in Zoe. 30 minutes. That we really should. I think it's like a 20-minute walk, so we probably should be going.
So we should say, if any of this has piqued your interest, get in touch.
Yeah.
If you work for a big incumbent, whether it's insurer or banking or whatever, we're venture building. So essentially across the world, whether it's with some clients in Hong Kong or in the US or in the UK, we've been building new banks and new insurers and new fintechs for a variety of different players. So do get in touch.
Indeed. You can reach me on david@11fs.com and happy to hear any comments or questions that you have going. But that's probably everything for this week. We're going to haul ass and head to the...
I've got to finish my beer first.
We're going to finish this drink and then we're going to head to the train. So thanks for everything this week. Hit us on Twitter if you've got any questions. Hit us on that email if you've got any questions. And look forward to talking to you next week.
Cheers.
Cheers. Bye.